Ladies and gentlemen, it's that time of the week where you get to listen to me ramble and yap about the market. And if you do as I do, you're going to make a lot of money this week. So let's not waste our time with a long drawn out intro for watch time. Just subscribe, follow me on Twitter. Here's a cute baby human, and let's roll the tape. Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button, and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500, and US stocks bounced back on Monday as investors look beyond President Trump's latest tariff threats, including new levies on steel and aluminium imports, and look to some positive economic and earnings data. And we actually saw a very positive day across the board, except for here in financials. Financials were actually very, very red today. However, they have outperformed very well over the last 6 months, so giving some back. And we also saw some very mixed price action here in healthcare, as well as Tesla down another 2%. Just for the record, Tesla's down about 26% from its all-time highs, a sneaky drop, unrecognized here by the market. Other than that, right, it was green pretty much all over, with the mega caps leading the way. Hardware gained in a very big way. ABGO gained, Apple, Nvidia, most of the hardware names. Same here with software. CRM gained, Netflix gained, Google, Microsoft, Meta, Oracle, all of the software names gained. Amazon was up 1.78%. Same here with Costco and Home Depot. Walmart was also up 1.32%. Visa was up 1%. MasterCard up 0.64%. Guys, all of the big names gained. The broader market gained. It was a very, very positive day for equities, coming off Friday's move, which was a lot of angst and fear built into it. However, there was still a bit of fear built into the market today. Gold on the tariff news was up 1.51%. So the market definitely using gold as a hedging tool. Gold this year so far is up about 10%, and it's one of the best performing sectors relatively speaking. The S&P 500 was up 0.7%, and that was led by energy, technology, industrials, and the discretionary space. Very interesting to see these moves, and that was weighed down by XLF, the financials, and well as healthcare. So they were down, but it wasn't a significant down day. Healthcare was only down 0.14%, and that was really it. We really did see gains in most sectors. Very positive market momentum. The open green stayed green. You love to see that. And when you really look at net flows here, you saw very positive flows in the Nasdaq 100, actually muted flows in the New York Stock Exchange, right? But then that actually kind of reversed here in midday. So, we definitely saw some form of a rotation happen here at this midday mark. We sort of led the entire market to gain, both small caps, mid caps across the board. But really what shone out today was actually just large cap stocks, large cap growth, large cap core, up 0.73. And the financials fall here in this value segment. Even with the value, and even with financials falling heavily, we actually saw the value segment here up 0.14%. But it was a positive day incrementally across the board. If you were in mid caps, if you were in small caps, you definitely gained today. And that was the theme of today's market. Now, there was a couple of reasons why this was. I think the biggest reason actually had to do with consumer inflation expectations from the New York Fed. The forecast was for 3.1%. We got 3%. I think that helped stocks just move incrementally higher. And we got a couple of really good bond auctions here in the 3 months and 6 month auctions as well. So I think that really helped the market move in the direction it did. I think what also really helped the market was the fact that we didn't get these tariff announcements on the weekend. They're only set to be announced sometime today. I think Trump's going to announce them after I release this video, but he's going to announce 25% tariffs on aluminium and steel. And we also are going to see reciprocal tariffs once China's tariffs come into place on the 14th. So this probably did weigh on stocks, but the market really looked past this. And we actually did see some positive momentum because of this. Stuff like Cleveland Cliffs, US Steel were up more than double-digit mid-teens. Cleveland Cliffs up 16% on the back of that tariff news. Again, tariffs on steel and aluminium from other countries really helps these domestic providers. It means that people who need aluminium and steel are going to come to domestic providers first. It's good for the US economy. as well as US producers. Now, Nvidia was also up 3% today, and that's because it got a slew of upgrades, particularly here on the open. Now, on Monday, Evercore ISI analyst Mark Lipicus reiterated its outperform rating and $190 price target ahead of its earnings report on February 26. Argus also reiterated its buy rating with a price target of $175. And I quote, competition in AI will continue to intensify, but beyond data center, Nvidia also has huge growth opportunities in gaming, professional visualization, and automotive, wrote Argus senior analyst James Kelleher. Meanwhile, Bank of America's Vivek Iyer also reaffirmed the chip giant as his top pick for 2025. Nvidia was up 3.6% today at $134 per share, and this represents anywhere from 20 to 30% upside to some of these price targets, some as high as 40% if you look to a $200, $205 price target from where we are right now. Now, Monday.com, we actually got some really good earnings today. Monday.com was up 26% on the back of its earnings. Fourth quarter revenue came in at $268 million. That's 32% growth year over year. Beat markets' expectations of $261. They also achieved record non-GAAP operating income, and the net dollar retention rate increased to 112%. The market loves to see this type of stuff. The stock was up 26%. Shareholders getting rewarded. A slew of upgrades followed. Congratulations to all Monday.com shareholders. Now, McDonald's was up nearly 5% here today, and that's because it reported actually pretty decent earnings. Same-store sales rose for the first time in a while. You love to see that. That means whatever the management team is doing, whatever they're implementing, it seems to be working and resonating with consumers and customers. That's what you want to see. And shareholders rewarding the management team today. For everything we saw today, Donald Trump, the tariff news, data, earnings, 3,400 stocks gained, 2,800 declined, but the majority of this was the mega cap names, and that's why we saw pretty positive moves here in the market. All in all, market breadth, pretty positive. Market momentum improving as well. A little bit of work to be done here at the 5-day and 50-day. We are starting to see shorter term trends come to par. Same with medium-term trends, and the longer-term trends remained as solid as ever. And this is why any weakness we do get, you simply want to buy the dip. Now, diving into the charts, equities were positive across the board. Large caps gained, small caps gained, the broad market gained, mid caps, small caps were kind of flat-ish here today, as you can see. So really, the majority of the momentum was in like very high beta and then large size. And then we had like all the other stocks sprinkled in between. The RSP up 0.27% against mid caps and small caps. So definitely a propensity for like large cap stocks and then like super high beta. That's what the market was really buying today. And I think that maybe had to do with some of the tariff threats. I think because the IWM small caps are less exposed to tariffs as a whole. That's why we saw a move into sort of like the IWM, the Russell 2000, and then stocks that can withstand some of the tariff inflation, like large caps and then mid caps and like profitable small caps. So just getting pushed to the side, but still positive net. Now have a look at yields. Yields did a very weird thing. The 10-year and 30-year yield moved up. The 2-year yield moved down, and that's because we got some pretty positive shorter term bond auctions this week, and the 10-year and 30-year yield continue to move up on the back of the tariff situation along with a stronger dollar. So we're going to see that dynamic and so that's the type of dynamic we're going to see with the tariff news along with all of the other stuff that comes with market stuff like the bond auctions. Now, as a result, we did see longer term bonds as well as the AGG shorter term bonds fall, but the AGG was kind of flat. So bonds were mixed here today, and then gold, silver, crude, sort of these inflation hedges, a tariff hedge, they were up in a very big way. And gold at the 2,900 area, guys. My price target for gold at the start of 2024 around this area was 3,000, and look at where we are right now, 2,900. Absolutely insane. Just very linear returns, no rest for the wary, onward and upward. We might even see 3,000 gold, before the end of this month in February, we'll see. But yeah, gold on a stellar run. This is the 1-year chart. Just incredible to see what gold and commodities as a whole are doing. What has silver been doing? Very similar, but not quite as strong as gold. There's definitely relative strength in gold to silver, all things considered. But let's actually talk about the S&P 500. And yeah, you know the drill, guys. When we're in positive gamma, which we are right now, you want to buy dips, right? and sell into rips. And that's exactly what the market did right here. They saw a dip, which came off the core resistance. They bought that dip and they were up 0.68% for the day. It was even more pronounced here in the Nasdaq 100. You could see, again, we came off the core resistance, made a low, bought that dip, and now we're trying to target the top end of the core resistance. So that's pretty much the 22,000 level for the Nasdaq 100. For the S&P 500, that's the 6,100 area. So I think that's probably the end of week targets, and we should find resistance here depending on the news cycle, earnings data, as well as everything in between. I don't think we're going to break above this without a significant catalyst. That catalyst could be CPI, but in terms of earnings, we don't have any like major heavy hitters in terms of earnings this week. So once we get here, expect resistance unless we get a very, very good CPI print, then we can break above. Otherwise, expect us to continue to range trade and take opportunistic dips for us to go higher. Guys, we also are in the month of February. February is a volatile month. We generally trade flat for the month. But February is really a time for consolidation and for us to sort of just get into the names and stocks that we like, particularly individual names. Now, stocks that I definitely do like is smaller cap names, the RTY, looking very, very attractive here. Now, today, small caps actually did bounce here at the gamma flip, and we're looking for the next move up. The game plan for the Russell 2000 is very, very simple. They need to make a move to the core resistance right here, where they use it as very, very strong resistance, and they need to break above, consolidate, and then make the next move higher. That is all the Russell 2000 needs to do. They need to break above this level right here. If small caps can do that, we're going to see a huge move to the upside. But until that actually happens, expect this line right here to be a very, very strong resistance zone. We've used it as resistance like 10 different times. Here, like even here to a degree. So continue to expect this to be a good resistance zone until we actually break above, and then we'll go from there. That's the game plan with the Russell 2000. For the S&P 500, the Nasdaq 100, it's just buying dips to the top end of the core resistance, and we're going to use the top end of the core resistance as resistance unless we actually get a very positive CPI print, and that's, beating market's expectations to the downside, relatively speaking. So that's what I'm expecting. Now, in terms of individual names that I think you should be looking to buy here in February, the very first one is actually Evolution, EVVTY. This is sort of like a turnaround play. It's been a bit of a dumpster fire, but it is starting to form a little bit of a bottom here. They got $500 million in buybacks. They're about to pay a 4% dividend. And I think once we sort of break above this like $77.5, $80 level, currently trading at 74, it's going to be onward and upward for us to hit the $100 mark very, very quickly. I like the stock. It's cheap and it's growing earnings very, very well. And it's not really affected by tariffs at all. Now, another name that I do like that's been showing incremental strength is actually Uber. They're up like 9 or 10% for the year. Uber was actually up 5% today, absolutely smashing price targets. So I do think by fair value for Uber is at about this area right here, the $79 area. So you're buying a seriously high quality company at fair value here for Uber, growing at like 20% plus. So Uber is definitely one stock. However, let it have a bit of a breather. If we could see a little bit of a pullback here to like the $72 area and then make the next move upward from there. So if we do get a pullback in Uber, get ready to load up the ship. Now, in terms of the mega caps, I do also like Google, guys. Got a bit of a dumpster fire here after its earnings, but we are consolidating here at this area. If we continue to consolidate here, this probably is the low, and then we'll make the next move up to the next quarterly. I think anything below $200 is an absolute steal. Looking really, really long term. Google should outperform the broad market, relatively speaking. So those are three stocks, three names I'm looking at right now that I really do like. Apart from my usual names, I still like those as well. But these three in particular, Uber showing relative strength. If we get a pullback, buy it. If you look at Evolution and Google, they've had a little bit of weakness and now looking for a turnaround. And again, all three of these stocks were up very big. Evolution up 2.83% today. So yeah, relatively speaking, outperforming the market, and we should see that outperformance continue, especially since most of them should be immune to tariffs, and that's really what you want to see. But all in all, I'm so bullish for 2025. I'm agnostic here in the month of February. I think any dips we do get in this market, buy those dips, stuff like this, take advantage of them, because we will continue to move higher in 2025. The macro picture is telling us that. The earnings picture is telling us that. The economic data is telling us that. And let's talk about sentiment. This is CNN's Fear and Greed Index, something we look at a lot in this channel, and we continue to remain in the fear zone. No surprise there. On a day-to-day basis, this doesn't change a lot, but on a week-to-week basis, you can see a lot of changes. Something to note though is that we are closer here to the neutral camp than we are to the extreme fear zone, so that is kind of positive. Nonetheless, you want to be buyers of equities, of stocks when we get into this extreme fear zone, this right here, looking for a move into greed, into extreme greed. Remember guys, you want to buy the fear, sell the greed, be contrarian. That's how you generate alpha in the market. But let's actually talk about earnings, guys. This is absolutely crazy. Guys, look at blended earnings growth rate here for Q4. About 350 companies have reported in the S&P 500. The majority of S&P 500 market cap has reported 14.8% growth. Right now, the expectations going into this earnings season was for 9.6% at the start of earnings season. So we are seeing a huge alpha in beats, particularly here in earnings, but not necessarily here in revenue. Revenue going into earnings season was for 4.1% growth. So we're seeing a slight beat here in revenue, a massive beat in earnings. However, companies that have beaten on earnings haven't been rewarded, and those that have missed have actually been punished more than usual. And that just really goes to show earnings expectations, valuations, and just the overall euphoria in the market coming into this earnings season. So we had a massive beat with earnings, but the market's expectations were really high, and that's why we're seeing very muted reactions on beats and punishment on misses. And again, this largely has to do with valuation. Where valuations are right now, particularly in the US market, they are very stretched, and these stretched valuations leave very little room for error. Look at the S&P 500 and equal weight earnings yield, 2.4% for the S&P 500, 3.6% for the equal weight. So the equal weight definitely looking like more value, but nonetheless, both indices trading well below the 10-year yield of 4.7%. Guys, generally speaking, you want to buy companies with earnings yield. I'd specifically like to look at the free cash flow yield above or at where the 10-year yield is at. So you could say that the S&P 500 is quite expensive, relatively speaking. But a place that you want to find value, or a place that you can find value, is definitely in small caps. The current undervaluation of US small caps relative to the S&P 500 presents an attractive investment opportunity for those looking to diversify their portfolios and potentially capture higher returns in the coming years. Generally speaking, we see immense alpha and price appreciation when small caps have been this cheap relative to the S&P 500. Now let's actually talk about the macro. So guys, we got non-farms last week. Now we actually missed the non-farms figure. We were expecting anywhere from 150 to 170,000. We reported 143,000 in January, and the market did sell off on that. There was other news last week, Friday, but the market did sell off. However, what we did see was the unemployment rate tick down, and that's because we had a huge amount of up revisions in the previous month. We saw 256,000 in the month of January. Those revisions got moved up to 308,000. So we saw a massive amount of up revisions. This meant the unemployment rate actually moved down to 4%. And right now, the labor market, yes, it is tight and it is cooling, don't get me wrong, but we are very close to that full employment figure. However, guys, something to be aware of is inflation expectations. UMISH sentiment last week came in. 1 year inflation expectations are at 4.3%. So there's a lot of fear in this market. However, do take this data with a grain of salt, and here's why from Tom Lee.
You know, it does seem like a pattern 2025 as markets sort of take a hit on Fridays and maybe panic Monday. So I don't know if that's going to be the case. To me, I think the inflation headlines from UMISH they're not great to see, but also I think that they are messed, or there's a political component to this, because if you break that down between Democrats who see 5% inflation and Republicans at 0, the blend is actually pushing this number up. But to me, it just gets messy around election.
And looking at data for the rest of the week, this is the high impact data. It really only gets going on Wednesday with Jerome Powell's testimony as well as CPI. Now looking at the headline figures right here, we're aiming for a 0.2 and 2.9% month over month, year over year. And then for the core figures, we're looking for a 0.3 and 3.1% month over month, year over year. If we hit these figures, and it's crucial we hit these figures or actually see a cooling inflation number, that would be really positive for equities. And then looking at data for the rest of the week, guys, Tuesday, guys, the big week of data as well. Shopify reports before the open, Coca-Cola, Humana, BP, Leidos, AutoNation, S&P Global, Marriott International, all before the open. Then after the close, we have Supermicro, Upstart, DoorDash, Lyft, Freshworks, Energy Transfer, Gillette. So guys, very, very big day here on Tuesday, and it just keeps getting bigger on Wednesday and Thursday. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.